All right, guys, we're back to our virtual class. We just got done with 15-2. We understood that when we have a note receivable, that we receive some interest from that note, and we only get paid for the days that the note was actually due. And so we divided it by the 360 days in the year, multiplied it by the amount of days that our note was outstanding. So let's move on to the next part. We're going to go back to our Mind tab. We're going to go to 15-3. Let's see where I was already in it. Here we go, 15-3. 15-3. Oh, we're calculating depreciation expense. So if you listen to the podcast, or if you did your engagement activity, how did that go? Did you guys do the prices right? Were you able to predict the price of the car? So talking about depreciation, when you have plant assets, those are the big machinery that your company owns. It doesn't keep its value. It's not worth the same amount all the time. It's worth its most when you buy it, and by the time you're done and after you've used it for several years, it starts to lose its value, and that's called depreciation, is the losing of its value. All right, so we're going to calculate depreciation. It says calculate the depreciation expense for a color printer costing $950. So that's real simple. That's our original cost, was $950. The printer has an estimated salvage value of $150. That means that at the end of its useful life, when they say you get a printer for about 5 years, it doesn't mean you don't have the printer for 10 years. It just means after 5 years, it no longer has any value except for this $150. No matter what happens to this printer, you can sell it for $150 because of the parts. So, somebody could take it apart, rebuild it, do something with it. So it's got $150 salvage value. That's the least it will ever be. So the estimated total depreciation expense, if you take $950 minus $150, you get $800. How many years? It says it has a useful life of 5 years. So we take our $800 divided by 5 years. So every year, our color printer is going to depreciate $160. It's going to lose $160 per year. So that's step one. Piece of cake. Woohoo! It's my first perfect. Killing the game. All right, let's go on to step two. Step two says calculate the book value. So the book value is, well, how much is it worth right now? All right, if we were going to sell this color printer today, how much would it be worth? Calculate the book value of the color printer at the end of its second year of service. So we've had it for 2 years. So if we had it for 2 years, it's 2 years of depreciation, $160. Let's see what they give us. Original cost, $950. Depreciation year one, $160. Depreciation year two, $160. And this is what we call straight line depreciation. There's a bunch of other ways you can depreciate assets. Some of the years, that was the only other one I could think of, but there's a bunch of them. You'll learn them when you take accounting in college. So there's other ways of doing depreciation. We're doing the straight line method. It's the most simplest and it makes the most sense. So 2 years of depreciation, that's $320 out of $950. That gives us $630. $600.30 worth of depreciation. Let's see if we're done with that. Woohoo! All right, we're killing the game. 2 perfects in a row. Let's see if we can go 3 for 3. I've never gone 3 for 3. Let's see if we go 3 for 3. All right, so we're going to move on to the next step. Accumulated depreciation entry. So now we have to put this in our books, right? We had 2 years of depreciation. What does that look like? So let's go down to the bottom. There are entries. They gave us 2 entries. I don't want to mess up my perfect record, so I'm going to pull up my other. They talk about the straight line depreciation method, useful years, accumulated depreciation, book value. We did all those things perfect. Here are our entries. So we have office equipment, depreciation expense, office equipment, accumulated depreciation. Good. Depreciation expense, accumulated depreciation, store equipment. We're just doing, oh no, I hit the wrong button, man. This thing stinks. Let's go back. Hopefully it's still there. Yeah. So we're just doing accumulated depreciation for printer. So let's see what that looks like. So we put in our 31. Let's see what kind of accounts they give us. Depreciation expense, office equipment, or is this store equipment? Oh wait, we're not even doing it for the printer. See, this is why reading is fundamental. We have to check our instructions. On December 31st, Southside Electric determined its total depreciation expense. Total depreciation expense is $2,150 for office equipment and $7,440 for store equipment. Journalize the adjusting entries. Okay, so we got accumulated depreciation and depreciation expense. So the depreciation expenses, which are our debits, are depreciation expense office equipment, depreciation expense store equipment. And remember, they go in the order that we see them in the chart of accounts or in the adjusted trial balance. So we're going to go depreciation expense office equipment. Depreciation expense office equipment. And then underneath it, well, we want to keep total of all the depreciation for that office equipment. So that's accumulated depreciation office equipment. Accumulated depreciation office equipment. Perfect. And then we want to do that same thing. Let's put our amounts in. So let's go. Office equipment was $2,150. $2,150 debit. $2,150 credit. Want to do the same thing. Oops. There we go. Same thing for depreciation expense store equipment. And accumulated depreciation store equipment. We put our two amounts in, and that's $7,440. $7,440. $74,440. And we are done. I think this may have been the easiest work together we've had in the past virtual school lesson. Let's see. There it is. Piece of cake. Perfect. All right, guys, have at it. You have the first three. I'm going to knock out 15-4, and we're done for the semester. Let's get it done. Hey, send me an email if you get confused on anything.